Julia, I'm going to start with you with stock of the day. Let me give our viewers the background in case they don't know the news yet. So the ticker code is LNK. The company has received a takeover offer from Carlyle Asia Partners, $2.8 billion. Now, it says that it will suspend, Link will, its on-market buyback as it considers the $3 per share proposal for Link, plus a $2.38 per share distribution for Link's stake in PEXA. Now, the board is not recommending shareholders take any action now. There might not be a transaction result. But the news does, continue with this M&A theme that we're seeing in local markets, but also, this is second bite at the cherry for Carlyle. Previously, it had teamed up with Pacific Partners for a $2.76 billion bid for full control. But of course, Julia, Link rejected that offer. But, what is it that Carlyle sees as so attractive here?
Well, certainly if you have a look at the share price, it's been depressed for a while. So there's a lot of value in terms of the price. Now, Carlyle, together last year with another partner, came for a takeover bid at $5.20 and then increased it to $5.40 before bowing out. And that's because our prices went a bit higher than that. So there has been a bit of interest in terms of Link administration. Of course, the jewel in the crown was always considered PEXA, which is already IPO'd. So I guess if you have a look at Link's core business now, most of that comes from superannuation. And what Link does is it provides the back end. We use Link and we use them for fund accounting, for custody, as well as for the registry side of the business. So they provide that not only on the corporate side, but also the fund side as well. And look, this is probably an area that is ripe for technology to come in and make it a lot more efficient, because a lot of the old traditional manual ways of doing things have really been replaced by technology. Even if you have a look at things like Know Your Client, where it used to be looking up databases and actually getting certified copies of identification, a lot of that has all moved online now with automatic checking of government databases and things like that. So I think in the old days, we used to think of takeovers and then think of, private equity coming in and making a leaner company through cutting staff and cutting costs. But the new way of doing things is really to view things through a technology lens to try and increase margins and also increase, the growth side of things as well. So Link, I think, is a company that's transitioning from old school to new school, and I think technology really provides that lever that it needs. So if Carlyle can come in and really just accelerate the technology path for Link, I think that would be a positive.
But what about the price that they're offering, Adam? It was knocked back previously, a $2.8 billion bid. And this one is, valuing the company at $5.38 per share, which is close to a 25% premium on yesterday's close. Is that a good price for PEXA shareholders? Or I should say Link shareholders.
Link shareholders. Yeah, look, I certainly think that, it is a decent price. They've broken that down a little bit to Carlyle Partners comprising of $3 per share in cash, plus a pro rata distribution to Link shareholders valued as well. So that does give it a sort of a little bit more, $2.38 plus the $3, giving that $5.38, offer, as it were. But what I did read from the announcement, and this is something that you've got to be really, really careful with, is the proposal is subject to several conditions, one being due diligence, negotiation, execution of transaction document, and securing debt financing. Why do you think they'd put a bid in if they haven't actually got the financing in place? So that's my first thing. The second thing also, that Link Group understands that the proposal would also require final investment committee approval from the relevant Carlyle committees. So in other words, they haven't really got any of their shareholders to bid for this or to say yes. So it seems very opportunistic. It seems like that these guys are throwing another lob or bid in to get a look at the book again. I think I'd be really cautious on this one. What do you do as a shareholder when you get a takeover? One is to wait till the 11th hour to then basically go in and, obviously if there's competing bids, then, you'd hold on. Or Henry Jennings also said many years ago, you take that first bid and you sell some of it there, because then the stock's going to move sideways for another 3 months and then potentially the market gets a little bit bored and the stock comes off a bit as well. So there's a couple of things that you can do, but I think this one looks highly conditional. I think the market looks like it might go through, but they're not really paying up too much at the moment, seeing that share price at sort of $4.80. I think you'd be a bit cautious on this one. I think it's very opportunistic at the moment.
So you're saying that if you were holding Link, you would potentially lighten up?
I would sell some up here, because there's been not been a disaster, but certainly the share price, as Julia has said, that it has definitely fallen away, and they're taking opportunistic bids on this one. So yeah, looking at that chart, I'd probably take some off the table here, because I don't think there's going to be another competing bid. And basically, yeah, it might fall back, and I guess the fallback would be closer to sort of that $4.20 mark, whereas I don't see it really rallying up to that sort of $5, and even the market's not really giving it that full value at the moment. So I'd take a little bit off here at the moment.
Does that sound about right to you, Julia Lee from Berman?
Yeah, I think I would hold off on selling for just a little bit. There have been a number of offers in the past, and although PEXA has IPO'd, in this space, we've also seen Mainstream, which of course was there was a takeover battle for that as well, and a very similar type of business where it's looking at the back end of funds. So there certainly has been quite a bit of interest in this area. So it is highly conditional, but don't forget that also we have seen Carlyle taking a look at the book. So it has done due diligence back in October last year, and it's come back with some interest there again. So it's already looked at the books. I guess this bit gives it another look at the books, but given that it wasn't scared away by looking at the books last year, it'll be, I think, interesting to see whether it can shake any other bids out of the woodwork, given there has been quite a bit of activity in this space over the last 18 months.
Yeah, certainly so. All right, so that's stock of the day, Link Administration. And to your point, guys, it's up by 11% at this stage of the game, just past noon in Sydney on this Friday.